Hello and welcome to the Business Standard Morning Show. I'm Ishan Gera and here are the stories for the day. The online gaming with stakes is navigating a maze of laws and corridors of courts in India. Despite a Supreme Court order saying that games with certain levels of skills should not be considered gambling, confusion over it still persists. Our next report offers a peek into the realm of online gaming in India and highlights the thin line separating skill-based and chance-based games.
Before we delve into the details, let us first skim through the difference between a skill-based game and a chance-based game. Chance-based games are banned in most states, while games of skill are not. In a game of skill, the player invests his time in learning, practicing, and honing a skill. In its 1957 order, the Supreme Court had said that games of skill would be where success depends principally upon the superior knowledge, training, attention, experience, and adroitness of the player. Games can be a combination of skill and chance, but skill has to be the predominant factor. With IPL just around the corner, fantasy gaming platforms such as Dream11 and Mobile Premier League have just received good news in a state that is home to one of their major markets. On February 14, 2022, the Karnataka High Court struck down select provisions of the Karnataka Police Amendment Act 2021, through which the state government had banned online games that involved monetary stakes. This comes as a huge relief for India's online skill gaming and fantasy sports industry. The judgment follows other similar ones given by the Rajasthan, Punjab and Haryana and Bombay High Courts that recognized fantasy sports as games of skill and a legitimate business activity protected under the Constitution of India. In October last year, the law banning betting and wagering in online games had been notified by the Karnataka government. The law stated that games of chance such as betting websites and online casinos should be banned. Additionally, it said that games of skill where there is a risk of the player losing money should be banned too. However, several Indian courts have previously called games such as fantasy sports, poker and rummy games of skill and deemed them legal. The Supreme Court too upheld Dream11's online fantasy sports format as a game of skill. One of the primary grounds on which the new Karnataka law was challenged was that games of skill, if they were being played for prize or bets, had been clubbed with games of chance. Gaming companies argued that according to a Supreme Court order in 1957, competitive games of skill are to be considered business activities that are protected under Article 19(1)(g) of the Indian Constitution. While the status of games of chance remains unchanged, with the February 14th judgment, at least for the time being, residents of Karnataka should be able to play online games of skill even if monetary stakes are involved. For more clarity, we spoke to Ranjana Adhikari of Indus Law.
So I think the precedent on this question are very fairly set in the form of something called the predominance of skill test. It basically means that there needs to be more than 50% dominance of skill factors over the format of a game. So a very important point that the Karnataka High Court in fact made was that just because a game is played online or it's played for stakes, it does not change the very nature of the game from being skill versus chance. This is a very important point, especially for online gaming. I think where you're talking about where the law went wrong, and I think we need to reflect on what were the reasons for striking down the law as well. One, legislative non-competence of the state to legislate on skill games. There is no legislative competence under what we call as the state list under the Constitution of India. Number two, violation of the fundamental rights to carry on a legitimate business. So any skill-based gaming company, it's a legitimate business already blessed by many Supreme Court decisions as well. There is a slew of precedents spanning over decades on the difference of what is skill and chance. Now, where the Karnataka law went really wrong was trying to impute the betting element and expanding it in the skill gaming context in such a way that even skill games were getting included under the gambling ambit. A court itself gave a very beautiful sentence in their judgment, which said that an activity which is predominantly skill-based, it cannot readily be banned just by a stroke of the legislative pen. So I guess that answers your question. Fantasy games, rummy games, these kind of games are not gambling. So, we should not use them interchangeably. I think the recent decisions of course, the Karnataka High Court, as well as the past Madras High Court decision as well, they have contextualized the entire fundamental right under which, skill games are protected. It talks about having reasonable restrictions, but both these cases have very beautifully spoken about how the restrictions need to be the least intrusive measure that could possibly curb whatever mischief that the government's trying to address. It's going to be almost impossible for any state government, whether Karnataka or any other, to be able to constitutionally justify a complete ban on skill based gaming. I'm not talking about gambling over here because gambling is pretty much under their purview.
A win in Karnataka is morale boosting for the industry. There is a thriving online gaming ecosystem based out of Karnataka's capital, Bengaluru. In fact, the state is reportedly home to at least 91 Indian gaming companies and developers. To understand the business impact of this verdict, one has to consider the size of the Indian gaming ecosystem. According to a 2021 report published by VC firm Sequoia and management consultancy company BCG, India's mobile gaming sector will grow from $1.5 billion in revenue in 2020 to $5 billion by 2025. The report said that while Indian gaming companies initially made money through in-game advertising, 80% of the $1.5 billion generated by mobile gaming in 2020 came from real money game spends and in-app purchases. In fact, there are now more than 300 million gamers in India. Meanwhile, revenue across all gaming devices hit $1.8 billion in 2020, up 500% from 2016. Let us now go to Roland Landers, CEO of All India Gaming Federation.
We have seen, that in successive high courts have adjudicated in a similar vein, whereby these bans and restrictions owing to a player playing a game with an entry fee or a subscription is completely legit and is does not is not tantamount to, does not equate it with gambling, because these are games of skill and covered under the constitution as the right to do business. So a lot of the consumers and gamers demonstrate that there are certain life skills that they are also learning in terms of agility, mental agility, adroitness, so many of skill sets. So overall online skill gaming is about $1.5 billion. In that there will be the advertising led models also. But if you speak specifically of the entry fee led subscription led gaming, then it will be about $1 billion. The thing is that there is an extremely large gray market of offshore gambling companies which are operating everywhere across the country, in all states. None of these laws are applicable to any of them. And what you're talking about, as reported in the media, is mostly happening on the gray market gambling sites. It has nothing to do with the Indian registered skill gaming companies. What needs to be banned is those guys. And all these issues, social issues that you mentioned, emanate from there, start and end over there.
However, the relief provided by the Karnataka High Court could be short-lived. The bench made it clear that the entire act is not struck down and the judgment will not stand in the way of legislature bringing in a new law in consonance with the constitution against gambling. After the verdict came out, Karnataka's Home Minister Araga Jnanendra told a financial daily that the state government might draft a new law to prohibit online gambling and betting. Jnanendra said that the government was studying the judgment in detail, especially focusing on the sections of the law that were found to be not in conformity with the constitution. The Home Minister added that the state government would prefer to rectify the identified shortcomings so that the new draft would be able to stand in a court of law. According to him, the government remains committed to banning betting and gambling in online games with appropriate legislation.
Just like online gaming, German software giant SAP continued its growth streak in the Indian market. In an interview with Business Standard Shivani Shinde, Kulmeet Bawa, the president and managing director for SAP Indian subcontinent, talks about the company's ambitious target to turn its cloud business into a 22 billion euro revenue unit, and also how its Indian arm has performed. Let us listen to the interview.
Conversing with you for SAP India will be the first time. You took took over at a very difficult time. Pandemic was kind of, started off 2020. So how has been the ride so far?
When I took over in July 2020, it was in the middle of the pandemic, right? So it started in March, and something that we hadn't learned over the years, Shivani, right? On how do you build trust and build credibility, and how do you build up teams and businesses over screens. So I think there was a lot of learning there. Very, very interesting, because we had to jockey. It's like very often I use the phrase, you're changing airplane engines midair, right? We say that very often. So because while you keep the business afloat, in fact, on a growth trajectory, you're not able to meet people. You have no coffee corners. You're not really, you're not having the in-person. We saw around us companies jumping onto the digital bandwagon faster than ever before. So the demand that was coming in solutions like commerce and even for our digital core, right, ramped up faster than ever before. And the last one, of course, is, and I'll talk about it, the whole transition to becoming a cloud company. And we were in the midst of it, or we were about to start it, rather, not even in the midst of it. So I think that whole transition, which I call more of a cultural mindset transition, it had to be fructified across screens. So very interesting time.
SAP is completely becoming a cloud company. It was always, but in truly, I think what pandemic did was, completely pivot to the cloud platform. Tell me, what has it meant for India?
In essence, I think it was October of 2020, where we actually made that shift. We called our strategy shift as reinvent. And, we said we're going to holistically pivot to the cloud. We saw consistent outperformance, as I term it, quarter on quarter, all across the year. We've overperformed on almost every single metric across the globe, which is phenomenal. So, a historic performance where we've accelerated our cloud growth in 2021 massively, with a big call out for 2022, saying that we would grow up to 26%, 23 to 26% non-IFRS cloud revenue growth. I think India clearly led from the front in this entire transition to the cloud. Clearly, the most stellar performance, our best performance in our history, was the year 2021. And I'll give you a flavor of what that means. So we were one of the largest contributors globally out of India for, I was talking about the RISE customers, the RISE with SAP customers who shifted to the cloud. So we were one of the largest contributors there from a number of wins perspective, right? And this was across, some of the largest enterprises like Mahindra's and HCL and Bajaj Electricals, etc., down to internet companies like Ola Electric, Wakefit, etc., which actually chose us for their digitalization from a holistic market perspective. From an India perspective, I think 3 of the 4 quarters we grew at triple digit.
You started off by saying 2022 year. I mean, the company globally has said is going to be a growth year. How significant, or what's the roadmap for you in this particular year? What's going to be your focus areas?
We will continue to build India as one of the fastest growing strategic markets, like I mentioned, in addition to, further diving deep into the innovation hub piece and how can we maximize our returns, given that we have so much of innovation going on in our backyard. By 2025, we will achieve a 22 billion of cloud revenue globally, right? So from 22 to 25, we will achieve a 22, and our total revenues would be to the 36 billion in total revenue by 2025. Now, simply put, India needs to continue to be a significant contributor to this goal. SAP's contributions, again, in this India's growth story has been immense, right? And to give you a flavor of that, today our customers in India contribute to more than 60% of India's GDP. Like I said, 10,000 SMEs, 50 million consumers of gas and electricity today are supported through our solution. So those are the top 2 or 3 things that we're doing from a business perspective, from a nation building perspective, and from the people perspective.
Thanks so much for your time, Kulmeet, and I hope we get to meet soon.
Thank you, Shivani. Thanks for taking out the time.
The German software giant last month reported that its fourth quarter profit after tax dropped by 25% as compared to the last year. But back home, India Inc. continued to clock a healthy quarterly performance in the third quarter of FY22. Indian companies' sequential earnings growth continued in the third quarter despite inflation and Omicron-related headwinds. However, it was the slowest growth in 6 quarters as increased input costs weighed on margins and volume growth. Our next report delves into how third quarter results panned out and how the inflation headwinds could affect growth of corporate India in the quarter ahead.
Fighting the third COVID wave and high base effect, India Inc. continued to clock a healthy quarterly performance in Q3 of FY22. Data compiled by Business Standard shows that combined net profits of 3,191 listed companies zoomed 26.9% year-on-year, while their net sales increased 24%. The reported combined net profits of Rs 2.39 trillion in Q3 FY22 were up from the Rs 1.88 trillion a year earlier, but down marginally from the Rs 2.4 trillion in Q2 FY22. Meanwhile, top line or net sales growth was higher in the recently concluded quarter than in Q2 FY22. This was especially true for the non-financial companies which are facing the brunt of inflation. Trend analysis by global brokerage Jefferies points out that IT companies reported strong revenue growth with a positive margin trend, while private banks clocked sequential loan growth and improved asset quality. Further, consumer staple companies saw mega volume growth due to weakness in rural margin but managed to support EBITDA on price hike. Auto companies too reported significant sequential EBITDA improvement on price hikes. Lastly, insurance and real estate companies reported strong top-line growth, but pharma companies' US generic pricing saw price erosion of near double digits. That said, earnings growth in Q3 FY22 were the lowest since Q2 FY21 quarter due to a combination of subpar top-line growth and decline in margins. The combined net profits of non-cyclical companies were up just 1.8% year-on-year in Q3 FY22, growing at their slowest pace in the last 6 quarters. Going forward, analysts remain skeptical about India Inc.'s earnings performance. A poor showing by non-cyclical sectors could hurt the corporate earnings, but the downside may remain capped if the RBI's inflation projection of 4.5% in FY23 is met, which could mitigate cost pressures. Let's go to Siddharth Khenka, Head Retail Research at Motilal Oswal Financial Services, to know what cues should investors track for the upcoming quarters.
Some of the key companies within Nifty which have reported strong numbers are Bajaj Auto, Maruti, Ultratech, HUL, among the banks and NBFCs, Axis, ICICI, Bajaj Finance. They reported better than expected numbers. On the other hand, companies like Tata Motors, Asian Paints, Dr. Reddy's, BPCL, they reported lower than expected numbers. So the key thing to watch out for is that companies, they delivered on the earnings front despite the unprecedented inflationary pressure arising from commodity and energy prices. So as I said, that the outlook on earnings have not changed after the quarterly results. So we expect a strong earnings growth recovery in the Indian corporate sector to continue. Some of the sectors which were impacted because of the inflationary pressure have managed to pass on the price hikes, although they have taken a hit on the margins as well as volume growth. Any improvement in that will only improvement in the commodity prices, softening of commodity prices will only help accelerate the profit growth for Indian companies going forward. Banks and NBFCs have started showing recovery. That's a good trend to watch out for. That's a sector which has underperformed and can be a sector in focus. Given that globally the interest rate and liquidity will be key factors that will be driving the equity markets globally. Further, we had the Union Budget, which focused on revival in growth by boosting capital expenditure, enhancing budgetary support for a lot of sectors. As I said, overall, if you look at the market, the recent correction of 4-5% from the top, Nifty is trading at about 20 times FY23 PE, which looks reasonable given the growth expectation and at the economic cycle that we stand at. So looking at that, some of, as I said, sectors that can do well from an investor perspective over the next 6 months to 12 months are banking and financial, IT, consumer, metals, cement, while autos could remain under pressure because of the higher commodity prices as well as supply chain issues with the chips. So that's the overall picture that comes out after the December quarter earnings.
In a nutshell, analysts have retained their earnings outlook for now, but they will closely monitor commodity prices and how the companies will balance price hike and volume growth. On Thursday, global market sentiment amid Russia and Ukraine standoff will guide the market sentiment. That apart, weekly F&O, stock-specific news and commodity prices will sway indices.
After the markets, let us see how technology is making our lives easier. After FASTag cut short our waiting time at toll plazas, now plans are afoot for similar experiments. Let us see what they are in our next report.
Thanks to FASTag, we now do not have to carry cash or cards to pay for tolls on highways. It is the first and the most successful example of in-car payment service in India. The next step now is to enable in-car payments for many other services such as fuel, parking, maintenance, insurance, etc. Before we get to its advantages and disadvantages, let us understand how the in-car payment system works. The easiest and most common way to enable an in-car payment system is through radio frequency identification tags or the RFID tags. For the uninitiated, RFID tag is a short-range wireless system that uses radio waves to communicate. These tags store a range of information read by a specific device called reader. The beauty of RFID tag is it does not require power of internet connectivity to work and can send data over the air. The other method to implement an in-car payment system is through an embedded Bluetooth low-energy module. These modules are expensive and require an operating unit to work, but they can transmit data at a higher range, which in turn lowers the chances of payment failure. Unlike the integrated systems such as RFID tags, this embedded system requires power to work. Another way to implement an in-car payment system is through application programming interfaces, APIs. It is an advanced and most secure way among the available methods to enable in-car payments, but is expensive and complicated because of hardware and software compatibility issues. It requires both power and internet connectivity to work. Coming on to the challenges with the in-car payment systems, security is one, and foremost because your personal and financial information may be compromised due to cyber attack irrespective of the system used, integrated such as RFID tags or embedded such as BLE module or APIs to enable the payments. Connectivity is another challenge, especially in embedded system, because there is still a wide geographical area in the country where the internet has not reached as yet.
The global in-vehicle payment system market size is expected to grow from $3.32 billion in 2021 to $12.5 billion in 2028. That's all we have for you today. For more news and analysis, log on to businessstandard.com. We'll be back tomorrow with our next episode. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.